Hi everyone, and welcome to my channel. Today we're going to talk about something that can truly change your life: investing in the stock market. Now, I know what you might be thinking. Stocks, investing, isn't that risky? And you wouldn't be wrong to think that. But what if I told you that understanding the different types of stocks could be the key to building long-term wealth and securing your financial future? We're going to break down this complex world into bite-sized pieces, exploring the different types of stocks you can invest in. From common stocks to preferred stocks, growth stocks to value stocks, and those wonderful dividend-paying stocks, we'll uncover what makes each one unique and how they could fit into your investment strategy. Remember, knowledge is power, and when it comes to investing, the more you know, the more confident and in control you'll feel. So, let's dive in and demystify the world of stocks together. Let's start with the most common type of stock, common stock. When you buy a share of common stock, you're essentially becoming a part owner of that company. It's like getting a small slice of your favorite pie, except this pie has the potential to grow bigger over time. Now, as a common stockholder, you have a say in how the company is run. You get to vote on important matters like who sits on the board of directors. And the best part? If the company does well and its profits increase, guess what? You share in those profits? That's the beauty of ownership. But remember, just like with any ownership, there are risks involved. If the company doesn't perform well, the value of your stock could go down. That's why it's crucial to do your research, understand the company's business, and make informed investment decisions. Now, let's talk about preferred stocks. These are like the VIP tickets to the stock market. They offer some advantages over common stocks, but with a little trade-off. With preferred stocks, you get priority when it comes to dividends. That means if the company is distributing profits, preferred stockholders get paid first before common stockholders. And here's another perk. Preferred stockholders have a higher claim on the company's assets if it goes bankrupt. Think of it as having a safety net, although no investment is ever completely risk-free. But here's the trade-off: preferred stockholders usually don't have voting rights in the company. So if you're looking for a more stable income stream and want to prioritize your investment in case things go south, preferred stocks might be worth considering. But if you want a voice in how the company is run, common stocks are the way to go. Next up, we have growth stocks. These are the exciting ones, the companies that are like rockets launching into space. Growth stocks belong to companies that are expanding rapidly, innovating, and disrupting industries. Think technology companies, cutting-edge healthcare, or renewable energy. Investors flock to growth stocks with the hope that their share prices will skyrocket as the company grows. And when these companies succeed, the returns can be phenomenal. But here's the catch: growth stocks are typically considered riskier than more established companies. They might not always have a long track record of profitability, and their stock prices can be more volatile. So, before you jump on the growth stock rocket ship, make sure you've done your due diligence and are comfortable with the potential ups and downs. Now let's talk about value stocks. These are like hidden gems in the stock market, often overlooked but full of potential. Value stocks are companies that are trading at a lower price than what their fundamentals suggest they're worth. It's like finding a designer dress on clearance. It's still a great dress, just at a discounted price. There could be many reasons why a stock is considered undervalued. Maybe the company is going through a temporary rough patch, or the market has simply mispriced it. Value investors believe that these stocks are poised for a comeback, and that their prices will eventually rise to reflect their true worth. Value investing requires patience and a long-term perspective. You're essentially betting on the company's ability to turn things around and prove its worth to the market. Last, but certainly not least, let's talk about dividend stocks. These are the companies that like to share the wealth with their investors. Dividend stocks pay out a portion of their profits to shareholders regularly, typically every quarter. It's like getting a little bonus just for being a shareholder. Now, dividend stocks can be a great option for investors looking for a steady stream of income. They can provide a cushion during market downturns, and can even help you reinvest and grow your wealth over time. But here's the thing: not all companies pay dividends. Companies that are growing rapidly might choose to reinvest their profits back into the business instead of paying them out to shareholders. And sometimes, companies might cut or reduce their dividends if they're facing financial difficulties. So, it's essential to look at the company's dividend history, its financial health, and its future prospects before investing in a dividend stock. That's it for today's lesson on the different types of stocks. I hope you found this overview helpful and feel more confident about navigating the stock market. Remember, investing is a journey, not a race. Take your time, do your research, and don't be afraid to start small. If you have any questions, please feel free to leave them in the comments below, and I'll do my best to answer them. And don't forget to like this video and subscribe to my channel for more empowering financial content. Remember, the most important investment you can make is in yourself and your financial future. Now go out there and make smart choices.